Hey crypto friends, for those of you who are new to the channel, my name is Garrett and I am a crypto day trader who absolutely loves the trading with moving averages. And my overall goal here with my channel is to simply help other traders in the most simplistic ways as possible. So in today's educational video, I'm going to be sharing with you guys a very simple swing trading strategy based on the daily charts that you can use to hopefully stop yourself from losing money. And for those of you who love trading crypto and would like to try out the same exchange that I use on a daily basis, feel free to go ahead and try out the Blowfin exchange here with the link in the video description down below this video. I personally love this exchange because they allow anybody from anywhere to be able to sign up and trade crypto futures. So if you're one of those people and you want to trade crypto futures, you can do it right here on the Blowfin exchange. All right, guys, so we're just going to go ahead, not waste any time, and we're just going to dive right into this. This is a very, and I mean very simple strategy to use, all right? I don't know why a lot of people don't use the 7-period SMA, but I absolutely love using the 7-period SMA, especially for this purpose right here that I'm going to be showing you in this video. So as you guys can clearly see, I've got the Solana daily chart open here, and I've been kind of tracking this for quite a while now, as you guys can clearly see. All right, so I've got all of my big important support and resistance levels already marked out, as you guys can clearly see by looking at my chart in the orange lines here. I've got this pink trend line going on right here following the trend that we're currently trading in. And what you guys want to do, or what I want you guys to do, is go to indicators, and I want you to find the 7-period SMA. So what you're going to do is you're going to go to indicators, you're going to type in moving average. Whoops, I spelled average wrong. Moving average simple. And it's going to be right here, and you're just going to click on it. And what it's actually going to do, and I'll just go ahead and click on it too, and I'll show you what it's going to do. What it's going to do is it's going to come out with the settings set to the 9-period. What you want to do is you want to go to the gear icon right here and go to inputs, and you want to change the length down to 7 and keep everything the same. You can style it however you want. You can change the color however you want and the thickness of the line, whatever. Do whatever the hell you want. But as you guys can clearly see, I have mine set to white here. So after you've got all of that taken care of, the next thing that you want to do is you want to mark out all of your important support and resistance levels. So I've already got mine marked out here for the sake of this video, and because I've actually been kind of trading, I'm currently in a short on Solana right now. And what you want to do is you want to mark out your support and resistance areas, and then turn on your 7-period SMA, which is right here. All right. So a little thing I want to talk about here real quick is with the moving averages, or with the 7-period SMA, or actually with all moving averages in general, is when price is bullish, or when overall price action is bullish, the price action will usually be on top of the SMA, or on top of the moving average itself, all right, which you can clearly see going on right here. Price action is on top when it's bullish. Again, right here, price action is on top when it's bullish. Even right here, price action is on top when it's bullish. And when price is bearish, price will be on the bottom of the moving average, as you can clearly see going on right in here, all right? So that's kind of the overall general rule of thumb, and it's like that with the majority of the smaller moving averages. So for instance, the 7-period moving average, and then even the 20-period estimate, or the 20-period exponential moving average as well, which I'll go ahead and turn on here real quick just to kind of show you for the sake of simplicity here. So even with these the 20-period exponential moving average, you can see the same thing, all right? When price is extremely bullish, price is above this 20-period EMA. When it's bearish, it's below the 20-period or 20-period EMA, which is the blue line here, all right? Now, the reason why I like using the 7-period SMA instead of the 20-period EMA is simply because I like to get in on trades much quicker. And as you guys can clearly tell, you can get in on trades much quicker with the 7-period rather than the 20-period EMA, all right? So I will go ahead and show you how I do that. So as you guys can clearly see here, all right, what I'm going to show you here is I want to show you the overall entries, okay? Overall, where I would have entered and why, all right? So as you guys can clearly see, you want to get in when price action starts to go either above this 7-period SMA or below it, all right? So right here, if you were to have ended up getting in right in there, or, you know, obviously, if, you know, let's say none of this price action even happened yet, and its price action is only right in here, and that's it. Therefore, you would have probably had this layer right here, or this line right here, or the top of this range marked as a resistance area. So what I would have realistically done is I would have probably waited until the first thing I would have looked for is I would have waited until price action crosses this moving average right here. But I would not have confirmed my overall bias until it actually crosses this resistance area. So once price action ends up crossing above that resistance area, it tells me personally that there's all kinds of good strength in this coin right now, and it's probably going to continue moving even higher up, which, as you can clearly see, it clearly did. So I would have actually ended up getting in on the opening of this candle instead. All right. So if you would have ended up getting in on that candle right there and riding it all the way to the top, now there's no telling how high it will go, obviously, but the one way that I like to tell how high it could potentially go is when price action starts to deviate very far away from the moving average itself. So as you can clearly see right here, this is kind of the space that I'm talking about here, okay? So the distance from the moving average all the way to the price action, all right? That's a pretty far distance deviating away from the overall moving average right there, all right? So that tells me right there that, okay, price is probably going to start cooling down here soon, and I should probably start thinking about getting out and taking some profits, all right? So I would have realistically probably ended up selling. So if I would have gotten in right here, I would have realistically started selling either at the top of this one right in here, or I would have realistically probably waited until that next candle, which, as you can tell, is a down candle. And once it started moving down, I probably would have gotten out. So realistically, right in there maybe, okay? So within a 5-day mark of swing trading this coin, you would have made roughly about, with 10x leverage, which is a very good conservative, number for leverage. With 10x leverage, you would have made roughly around 170% right there off of this 17% move just going up right there, all right? Now, the same thing would have happened right in here as well, all right? As you can clearly tell, price action kind of came back down a little bit. It cooled off a little bit, but as you can clearly see, it did not end up closing. We didn't get a good solid closure beneath the moving average. So that tells me right there that, okay, momentum is still pretty damn strong, and this next new candle ended up opening up and ended up going up even higher, all right? It ended up going up even higher. So that tells me that bullish momentum is still here, so I'm probably going to start looking for longs once again. So I would have probably ended up getting in on this next candle right in here, all right? And actually, I probably realistically would have waited until after this downward candle just to make sure this downward candle didn't end up nuking and going down even further. But since it clearly didn't, I probably would have gotten in at the opening of this next candle right in here, all right? So you get in on this open candle right here and you ride it all the way up. And as you can clearly tell, within the next 2 or 3 days after that, you can clearly tell that price action kind of started to come down and started to get bearish. But it clearly picked up again and even ended up going up even higher right there. So realistically, I wish I could say that I probably would have held it all the way to the top of here, but that's not realistic. I probably wouldn't have done that. I probably would have ended up selling somewhere right in here or something like that. Once I started to realize that price action started to veer away from that 7-period SMA, because that's just simply how I trade and how my personality works when I trade, all right? So even right there, within 2 days of trading that right there, within those 2 daily candles, you would have made roughly with 10x leverage another 100% in profit right there. So right there, guys, so within 2 weeks or so, you could have made probably an easy 185%, roughly around 185% profit within 2 weeks. Guys, that is a very good amount of profit to make within just a 2-week time frame, all right? People that are trading the TradFi markets and the stock market and the regular standard traditional futures market, they would love to be able to make these kinds of profits, all right? These kind of profits just do not happen in the traditional markets, all right? So realistically, you would have made some damn good profit just off of that move right there. Now, the same thing is true for the downside, all right? So when we are looking for shorting opportunities, all right, you can clearly see I'm going to use the most recent downward slope here as an example. So realistically, let me grab my arrow again. So as you guys can clearly see, we've got this big movement to the downside right here. We ended up crossing the EMA right there, and I would have ended up waiting until it closed. Now, obviously, as you guys can clearly see, this candle ended up closing without having a wick at the bottom of it. That tells me right there that there is all kinds of bearish momentum going on right now, and people are selling like crazy, and that's exactly what started happening, all right? So I would have ended up getting in probably around this candle, and yes, it did end up start going back up again, but I would have had a stop loss in place to overall mitigate my overall risk there. So my stop loss realistically wouldn't have gotten hit because my stop loss would have been a little bit up here higher. But realistically, as you guys can clearly see, price action went up to this moving average once again. We did not get a closure above it. Therefore, that tells me that, there's not enough bullish momentum to continue the trend going even higher. So we're probably going to end up dropping even more, which we actually did. So realistically, if you would have I would have gotten in right here and rode it all the way down to probably right around in here somewhere, or right around in this level right in here, because I would have had my support level marked out right in there. All right. So realistically, and on top of that, we've got a very far deviation from the moving average as well. So again, there's that space again that I'm talking about, the space from the actual candle itself to the actual moving average, all right? So right there within a 6-day mark, you would have made roughly around, let's see here, 15%. 15% multiplied by 10x leverage, that's 150% profit right there within 6 days that you could have made, all right? So this is what I'm overall talking about here as far as how you can utilize these moving averages to really work for you in your swing trading. So if you are losing money trading in the crypto market and you've got all kinds of indicators all over the place and you're just kind of lost trying to figure out what the hell's going on and what to do, it does not need to be as hard as you're making it, okay? You can literally make informed, good decisions just based off of one moving average and looking at price action itself, all right? Now, before I go ahead and wrap up this video, if any of you guys are looking for a safe space to talk or a safe space to ask questions or talk about trading, feel free to go ahead and reach out to me on X here. My name is Garrett_N_stuff, and send me a direct message and I will send you a link to my free Discord server, which you can feel free to ask any types of questions you would like or get help or just anything that you want to ask questions about or anything like that, all right? But if you guys enjoyed this video and got some decent value out of it, please make sure to go ahead and subscribe to the channel, hit the like button below the video, and leave me a comment below on your personal thoughts of what you thought of this video. And with that said, for those of you guys who stuck around and watched this entire video throughout the whole thing, thank you guys very much for watching. I appreciate all of you, and I hope to see you all in my future videos.